Good afternoon or good morning, depending on where you are. Welcome to our webinar, Managing Your Nonprofit Future, Not Just Its Past. Welcome everyone to our presentation. We have a very exciting topic, I think, today. Joining us today, we have two really special guests. And so I think we're gonna kick things off. So just a brief introduction. As I mentioned, we have two really special guests joining us. Michael Gilman. Mike is an independent fiscal and financial strategist for nonprofit organizations and a co-founding principal partner of Fiscal Strategies for Nonprofits and co-founder of Sustainability Education for Nonprofits. Before starting FS4N, Mike had over 20 years public accounting firm experience as a partner managing nonprofit business, fiscal and financial service consulting specialty group. He has been designing strategies and teaching budget and project-based systems and fiscal and financial management enhancement strategies for over 30 years. Also joining us is Paul Preziotti. Paul is a partner with the multiple office CPA firm Johnson & Lambert. He is responsible for providing audit and consulting services to nonprofits, entities, and employee benefits plan. He has significant experience serving as an advisor for organizations on a variety of issues, including risk assessments, governance, compliance, and internal control considerations. And as a quick introduction for myself, I'm Bulin Tran. I'm Senior VP of Financial Solutions with JMT Consulting. I'm located in the DC area. I've spent my entire career pretty much serving and supporting nonprofits with their back office accounting operations, leveraging various financial solutions, one of which we're going to be talking about a little bit. Hopefully we'll have time to show you a little bit about Sage Intacct. So I'm going to move forward here. So just a quick housekeeping. If you have any questions, please submit your questions in the question box on your control panel, and we'll get to them as we go through the presentation. And today's recording and slides will be emailed to you following the webinar. This is a CPE accredited presentation, so your participation today may earn you 1 CPE credit. And to receive a CPA credit, you need to be actively respond to the polling questions. There are 3, you respond 3 out of the 4 polling questions. Complete the survey that will pop up at the end of the webinar and stay on for the duration of the presentation. If you have any technical issues, please indicate in the chat, or you can also email us as well. So really quick introduction about who is JMT. So JMT was founded in 1991 to help nonprofits achieve their mission. We work exclusively with nonprofit organizations. As you can see, we're headquartered in Nashville. We serve over 2,000 nonprofits across the US and Canada, supporting nonprofits' back office accounting operations with financial systems and accounting services. And just a really quick review of our services. We provide comprehensive nonprofit financial solutions, which include implementation and support of ERP solutions, Sage Intacct being one of them. We also support MIP. We implement and support a variety of budget management solutions as well as provide outsourced financial services. We have a list of outsourced services listed below. So this is a CPE accredited presentation. So our learning objective for today is to identify proven techniques to streamline the month-end close process, enabling faster financial reporting and freeing up time for strategic forecasting. Another objective is to understand how to leverage automation and AI tools, such as those in Sage Intacct, to reduce manual tasks, improve accuracy, and support proactive financial planning. So our agenda, we're going to talk a little bit about the why a short month close is critical. Why are we talking about this topic? And then we'll dive into talking about the month-end close challenges, speak to the best practice to streamline your close. We'll talk a little bit about the role of technology, automation, and AI, how that is helping organizations to shorten their month-end close process. And then we'll do a preview of Sage Intacct, a couple of areas that we're going to look at, and then we'll wrap it up with some takeaways. So we love to start with a polling question. So we wanted to know from you, how long does it take your month-end close process today? How long is it taking you to close your month today? So we have a couple of options here. So we're going to give a few seconds to see how folks respond to these this polling question. So is it less than 5 days, between 6 to 10, 11 to 15? So let's see what our results look like. All right, so it looks like for majority of the folks, it's taking 6 to 10 days. We have some that are taking, I think we have 25% tie between 16 days or more, and then some that are unsure. Actually, the results actually are not too bad. So let's talk a little bit about why short month end close is critical. I was thinking, Mike, should we start with you?
Sure. I think it sets a tone. Paul, I know that's not really not a technical term, but I think it sets a tone on multiple levels of the close process. And I want to start with one that you might find interesting is that the close is not just for the finance department. I think everybody in the organization should be aware of it because oftentimes the stumbling blocks to a faster, more efficient close sits outside the finance department.
Yeah, I agree, Mike. I think it does set a tone. And I think the first bullet on this slide is so accurate, right? You need up-to-date financial information in order to make decisions and give non-financial managers the information they need to steward the mission of the organization.
Exactly. And, I think in times, looking back over the last 5 years, even a few days difference in time can make a change in the decision-making process. This information's got to be in the key decision makers' hands as soon as possible.
Yeah. Now, the question at hand is what's the right number? I know everyone loves this answer. It is an it depends answer, right? If you're a complex nonprofit organization with multiple different sources of federal funds where you're waiting on information, it's probably going to take you a little bit longer. But if you're a nonprofit with less complexity, some of the possible timeframes that Boo Lind outlined there, that's a reality for you.
Oh, go ahead. Well, I was going to say that
Please.
one of the reasons that I came to both of you and suggested this presentation was because this very question about how long should it take to close the month was actually asked by a CFO who I was talking to. And I thought that, it was an interesting question because, as you had mentioned, Paul, it really depends on the organization. And I think that in a prior conversation that Mike, like the three of us had, I think you mentioned, Mike, that it's not about how long it takes, right? It's about trying to reduce that time, which I totally agree with you. Obviously, the shorter it can take you to close your month, the better you are positioning because then you allow yourself to move to the next step, right? And which is focus on how did we perform year to date or for the month and year to date, and are there any is there any strategic planning that we need to do in response to sort of where we are today? And so now we're going to get into a little bit on this later, but there are things I think from a process, from a technology perspective that can help you improve that process. But But yes, I think that, I mean, for all three of us on this webinar would agree that, the sooner you can close the book, the better. And there isn't the magic answer in terms of you should close it by, whether it's 10 days or 10 business days, and. Um, but the other thing that I also wanted to mention is, it is, sometimes I differentiate between month end and year end close. You
Sure.
know, I mean, what would, a month end close is different than a year end close. A month end close, you may not necessarily need to have all the numbers. And, we're looking at, certainly you wanted to get all the transactions, like critical transactions in, but I think there is a toss here between waiting to get all the information versus getting what is critical out, so that folks can start seeing what the numbers look like.
And Berlin, I think that brings up a good point. There's 12 month-end closes, not 11, 12, because I always like to think that you can do a preliminary sort of regular or fast close at the end of the year and then the extra steps. But Balloon, and then Paul and I have talked about this many times, and you and I have, it's like periodically you should be doing an assessment of your close process. And there is no one perfect number of days for any organization, but I think there's always opportunities to both from a risk management and efficiency point of view, and then an analysis of where some of the pinch points have been coming up in the past. The technology is constantly changing. The people who are involved with the close process is constantly changing. So I think it lends itself to at least an annual review process, maybe more often. But I think once a year it's healthy. Paul, would you agree to look at that close process and see, are there some opportunities?
Yeah, I agree. I think there's a couple of different things you can always look at. There is some argument that a year-end close might take longer because there's certain steps you only do at year-end. Good example, not saying you should do this, and not every nonprofit will have this, but I know a lot of organizations only do steps related to restricted funds at year-end. Well, my gentle pushback would be if you added that to every monthly close, wouldn't it be more effective? And wouldn't it make your year-end a smoother process as you're getting ready for your audit? I'd say probably so. And then also going back and analyzing where those bottlenecks might occur, whether it's with specific individuals, specific processes, Mike, because chances are if it's taken longer than other steps and it's, reasonably the same amount of effort, there might be an opportunity for improvement there.
Right. And even on a non-technology basis, Paul, once you in looking at that, you might find one of those pinch points. So for example, at the end of the year, I had an organization that uses a third-party provider to run their journal, and it's very complicated and to get the numbers. And to wait for that process during the year would push our close way back. And we rely on some estimates that are reasonable, fairly easy to come up with, but most importantly, are fairly accurate. Whereas the end of the year, we need that to the penny to, for an audit, because it was a big percentage, a material percentage of their activities or revenue and expenses.
I have a question, actually, for either of you. When you go through a month-end close, and should the CFO be thinking about materiality, and what would that, how would they determine what that materiality is?
I think it's a really good question because I think, Paul, would you agree with this? I think we're always cognizant of materiality. It's different during the year interim than at the end of the year. And to me, Paul, I'll throw out first, my interim is, are we waiting for something that's not going to materially impact, management decision, the numbers and such? And I look at, from that point of view.
Yeah, no, I agree. And materiality, most commonly it's thought of during the audit process. And as you probably know, if you've ever tried to ask your auditors for what that materiality is, they can't tell you. They can tell you some of the benchmarks you use. But the way I always like to think about it is, and you said this just a little bit, Mike, what would impact a reasonable user of the financial statements? Is $10 going to impact somebody? Probably not. but only you and your organization, based on the users of your financial statements, can figure out and determine what that number is.
All
Exactly,
right,
well
so,
said.
oh, go ahead, Mike.
Yeah, no, I think that's well said. And I think coming back to Paul, I think that materiality, yes, auditors are a little hesitant, and they should be, because it's not just a single factor. You should have that same focus during the year of materiality factor. And to me, there have been some small numbers I worry about because I want to know that the process to monitor that is there, Paul. You know what I mean? Versus not just the dollars. And so, for example, my materiality on reconciling, bank accounts, any cash related accounts is very low. But my materiality on bringing in like that third party estimate, or they're running your trade show, they're running your periodical or something, I think we can rely on some reasonable estimates.
So I'm going to move on to our next slide because we have a couple of slides I want to make sure we get through. All right, so some of the month-end challenges. Manual reconciliations, lots of Excel work. Actually, I not only is it, you know, um, you know, I would say if you're using a lot of Excel work as part of your month-end process, not only is it manual, it's also high risk, in my opinion, because once you're in Excel, there's just you can do so much in there. You kind of lose track of versions, and there's all sorts of issues when you're dealing with Excel. I think Excel has a great place in certain situations, but it can also pose a lot of challenge as well as risk. Um, Resource lacking, we've seen that with a good number of my clients in terms of as a challenge for month-end close. Um, Paul, what are your thoughts?
I think you said it well. Excel is a great tool, but it's not a tool you should be using for everything. And as organizations get larger, when you store a lot of information in Excel, when you're doing budgets in Excel, it's more likely to have errors in it. That's just the nature of it and the nature of human error. So I think where you can automate systems, it's a win, right? It's a win because number one, it's if it's done right, and that's important, and we can't take that for granted, it can be a lot more efficient. But then it also has a high probability of reducing the risk of error. What do you think, Mike?
I agree. I think although there's a lot of safety measures you can take with Excel, the average user doesn't, and it's highly susceptible. And I found it in my own spreadsheets over the years, where a formula accidentally gets erased or something. But Berlin, I'd like to come back to that second point there. And to me, that highlights an activity that takes place outside the finance department that can be done pre-month end closing. And I've always had, restricted funds, restrictions. We rely heavily on the different departments that are running a grant. We rely heavily on the development department that's soliciting funds and obtaining new contributions, and they have the most up-to-date information. And some of the best organizations I've had the privilege of working with, we were reaching out a good week, 5 business days before the end of the month to the development department because they were always a hard group of people to chase down, but had extremely valuable information, right, Paul, that we rely on that we can't get at directly.
I had a presentation earlier this week, and it was we was talking about collaboration. And I think that the last bullet in what you just said, Mike, is that the data have there's ownership that's associated with data.
Good point.
And you were talking about other folks that are outside of the finance department who have ownership of that data. And month-end close process is not just about finance folks doing their thing at the end of the month. It really, there's a bit of collaboration that needs to take place. And the collaboration, to have effective collaboration, you you want to make sure you have a culture of that, meaning the culture within the organization supports that, collaboration and establishing expectations, setting expectations, especially where I see, and you spoke about development, but I'm also thinking about, some of the nonprofits that may have operations outside of the US, especially like NGOs, right? And when you're physically not in the same location, it makes things even more difficult. And I think that's, it's important to, I think as an organization that you need data, it's just to make sure that you have that culture in place and set expectations. And it's expectations what people should be doing, and it's also part of their job to make sure that they deliver on that.
Berlin, I think you make a good point on expectations, but I think the reality is that us in the finance department, the way we work around deadlines and deliverable dates and things and compliance, we have to take the lead on reaching out. And it seems to me, my favorite is always to compare finance staff to the development staff. I mean, they're just two totally different types of people, cultures within the organization, but they're amazing at, talking to donors and funders and grant sources, but they're not the best on compliance and regular reporting than we are. So I think we need to prompt them, because we're trying to prompt success, not look for failures and blame. And so I think there, I like to point out to the finance departments, yes, you don't have the information on that will or that donation document, but you could help them by contacting them pre-month end.
Yeah.
You're helping to remind them. And even if you have to do it every month and think selfishly about it, it's going to make your job a little bit easier. You're going to be able to close a little faster. The organization is going to be better off, as Paul said before, on every level with information early versus information late.
Yeah. Totally agree. Any other comments before we move to the next slide? All right. Oh, we got to our next polling question. So, what is your biggest challenge during month-end close process? Is it manual reconciliation, delay or missing data from departments? We were just talking about that. Is it the lack of automations and tools? Producing timely reports for leadership? Or there's something else. So what is your big, there could be more than one answer to this for some organizations out there. So we didn't make it too complicated. So we're gonna wait just a second just to see what folks come back with.
Yeah, I'm curious on the response on this one.
I wish there was a way that you could check more than one,
All of the
No,
above.
that's what I was going to say. It could be all of the above.
Yeah, exactly. So our response is significantly delay in missing data from
The
departments.
departments.
Yeah,
Not surprising. Not surprising at
not
all.
surprising. Yeah.
And that's where I think that point we were just talking about is this, although we rely on information from these other departments, I think we need to be out ahead helping them to get us the information, or which sometimes is just a prompt or an ask.
Yeah.
Yep.
But it is tough. I mean, you're dealing with people, it's, relationship, and it's, so yeah, I mean, that's something that you always want to work on, and have, foster that positive relationship where you're supporting each other. All right, so let's move on to our next. All right, best practice to streamline month end close. So a couple of things. Checklists to drive the process. I'm a big fan of checklist. I would say that if you're on any modern ERP solutions, I mean, there's tons of accounting systems that are out there that have a month end or have some sort of a checklist built into the system. If you're not using that, at least use Excel or something. You should have a checklist that guide you through the process. Pre-month and steps Mike, I think this was one of the items that you had mentioned. Maybe you can talk about this one.
Sure. And I think it's worth reiterating in with all the different ways we can have checklists, you can never have too many checklists. And I think also, Bulin, is the checklist should be open for visualization, use, and awareness to not just a person. And I mean even outside the finance department. And I stole this, Paul, from another organization. Saw the director of finance was really good. They had it up almost like a thermometer each month. You know how
Yeah,
when you're doing a fundraising campaign, they say, "Oh, we're
yeah.
60%, 80% way there," and it would catch the eye of the CEO. And every once in a while, she would go, "Hey guys, you're holding us up." You know, not the finance way, other people. So the checklists are there. And Berlin, if I don't take my checklist to the grocery store, you know what happens? I know I'm supposed to buy eggs, and I
I
always
know.
forget.
I
Couldn't
It
buy
know.
is,
too much. Yeah. No, I think checklists are great. As an accountant, I love checklists. It's inherently
yeah,
built into me. The one thing I think that's important when you're doing a checklist is making sure it's a living, breathing document. Because, Mike, I think a
sure.
lot of times there are steps that should be in the checklist, but for whatever reason don't make it on there, but they should be.
Yeah, and you could have the checklist not for every month, but once a year. Paul, you and I were doing a presentation this not too long ago that check the checklist. You
Yep.
know, once a year, do we update it? And a small change can go a long way. Because some of these missteps, at the end of the day, we all hear about these crazy stories, but oftentimes it's a pretty average step that's missed that causes a cascade of an event. And so it's just because we're busy people, right? And we're distracted.
Well, I totally agree, Mike, when you said that, you want everyone to be able to see it, and you're also getting people excited because there's not that much excitement doing the same, close 12 times a year, year after year, right? So, yeah, and I think, putting it out there, hey, we're on target, you're trying to get some excitement out there. For a process that is, that you do again and again. So yeah, I think that's a great idea.
Yeah, and Berlin, it's a simple fact. More eyes means more chance
Sure.
that someone's going to notice something, and sometimes it's literally a minute or two that saves a big misstep. And I think the pre-month end close steps could be some of the more well thought out checklists, Paul, that I've seen have like they separate the steps into 5 business days before the close, and then 5 or 6 business days after the close, because there's some things we have to wait before we can get. And I like that, segmenting the list a little bit.
Yeah, and I think you need some tool to keep everyone accountable. Now, what that tool is and picking the right one is going to depend on knowing your people and knowing how they operate. For some organizations, that may be via email, keeping people accountable. For some, it may be via calendar appointments. I'm a calendar guy, so that's me. Or it could be, standing meetings. But Mike, I think you would agree having some tool and vehicle for accountability is paramount, right?
Well, 100%. And I don't know if this is a correct statement. I almost look at the calendar as a form of a checklist.
Well, I've seen some that certainly are.
Yeah,
That's
because
where, again, it comes down to knowing your people and knowing how they're going to do it. Because, yeah, I'm sure you've seen those calendars where there is no available time.
right. But people also, if you look at the people who have these really religious calendars, they're putting lots of detail in, it's a checklist that happens to be date sorted.
Yep.
And that's another point where why you can have multiple checklists. These are not to be redundant. It's because they have different perspectives. Some are due by when due, others are due by what you're trying to do. Like a checklist to go through, a budget process will look differently than a checklist for the month of January.
So I do want to mention two items on here that I think can help shorten your close, and that is the pre-month end step. So there's a lot of things that you can do before the end of the month, and then automating the reconciliation. So one of them is actually the bank rec. So a lot of these systems have what they call bank feeds, and it's literally clearing the checks and the deposits for you. And it syncs, every couple of hours, with your bank. And these are things that you can just, you're basically, by having those automation in place, you could do your bank reconciliation daily or weekly. It's better than you don't have to do it at the end of the month, right? And so these are some of the things that you can just knock off, or setting up prepaid. So if there's, the recurring entry to handle the prepaid, right? So you can set up these entries ahead of time, and so they just post automatically at the end of the month, and then all you need to do is tide your numbers down, and it's done. So there
Exactly.
are things that you can do.
Yeah, and I think, Berlin, there's a lot, just as an example, as you referred to, the reoccurring journal entries. Again, this can come down to a materiality because oftentimes they can be spot on or close enough to save time. But there's a question I think you can ask, and it's interesting, is like, of the steps in our month end close, what could we do before the end of the month? And you'd be surprised, even if it's just pulling 2 to 3 of them out of there, some of the balance sheet reconciliations that we do, they don't need to wait to the end of the month, type of things. And I think you'll find more than 2 or 3 items. And we didn't say this earlier, Berlin, but this is where this pre-month end close. It's not how long it takes to close, it's can we shorten that process a little? But oftentimes you're not just shortening it, you're making it safer, you're making it stronger, and looking to, because sometimes what's holding you up is not you're being extra safe, you're being redundant. There's extra steps in there that are not necessary anymore that we could automate.
The one last thing before we move to the next slide is sometimes when you're in the process, you've been with this organization a long time, and this is the checklist that you've used. It would not hurt to have someone outside to come in to look at your process, right? Because it's a fresh eye. And then, they could give you some perspective on why don't we do this, instead of doing it this time, you could think about doing it this time. There's getting a different perspective. It could also be helpful as well, because if you're doing things repetitively, it's pretty much your month end checklist, pretty people pretty much use the same checklist unless something drastic happens. But I think that having someone else look at it may also be helpful.
Yeah, you sitting on like a listserv or a user group of controllers, a user group for directors of finance and such. I've seen these being shared back and forth. And the good ones are the ones that are shared. The people who are interested, they take this seriously, and you pick up some amazing little tips that can equal days of close.
Mhm, mhm. All right, so let's move to our. So role of technology, automation, AI, how automation changes the game. I think we kind of talked a little bit about this. Certainly, automations help cut down manual work. There's a lot that the system is able to do for you. I mentioned just earlier today, just a few minutes ago, about the bank feed as being one of them. And there is also, there's a lot of AI that are built into these systems that will catch anomalies, so if you book a journal entry and it's not an entry that the system recognizes, like it's not your typical, it's going to flag and let you know, hey, is there an issue with this entry, right? So when you have your workflow turn on, it's going to be looking at those entries. So and then also one of the things that a lot of these systems have also, and Sage absolutely has this, is leveraging AI to automate, the AP process, meaning you can send your invoices to Sage. There's OCR capability that strips that data from the invoice and creates the bill for you. It even tries to code it for you, and it's amazing. You wonder, like, how does the system know how to code my invoices? Well, that's because AI is looking at your data, is looking at the pool of data that you have, and it's looking at patterns, and it's figuring out when they see this invoice, oh, I've seen how this invoice was coded, and therefore I think it should be coded this way. And so it's not going to post it for you, but it's certainly going to, it's going to populate for you, and you can review and seeing if that is accurate or not. It's just amazing in terms of how much AI is really leverage to automate the solution, and it's only going to increase. I mean, there's just more to come, right?
Yeah,
Yeah.
AI is a great tool and it's here to stay. And you said it, it's going to change a lot of stuff regarding accounting. We're not going to turn this into the AI webinar. Believe me, if you want to
No.
find that content, you can. And there's a lot out there and it's great. The one thing I'll just add, since we are talking about controls, is if you're using AI, make sure you have controls in place to monitor it and review the output that it's giving you. The best example I heard given, this is a pretty funny one. If you're into nonprofit accounting revenue recognition, you'll know that under the accounting rules, there's only 5 rules. There's 5 steps. That's it. There isn't a 6th step. So I saw someone spit into one of the AI systems, hey, can you give me the 6 steps for revenue recognition? And it gave him 6 steps, all right. Just the 6th step was not accurate. So I just tell you, make sure you have controls to review and use the technology, but it is great.
Yeah.
And
Uh,
and speaking from a volume perspective, and the biggest one I like to use AI on, and I've had organizations, especially large staff organizations, where we'll put the timekeeping systems on like, that ending on the 25th day of the month, except for the end of the year, and using AI to analyze, if you have 100 staff people, how that time is being allocated. It can find a needle in the haystack, and then you got to check AI. But literally, it's to me, Paul, I think it's like a heavy time saver. And the longer an individual had to work on something, the more chance they get bored or lazy and miss something.
No, the digital workforce is a great thing, and there's a lot of changes now, and there'll be more in the future. So again, use it, but have appropriate controls in place. That's all for our AI spiel for today.
okay. All right. So I'm going to okay, so I'm going to switch. We're going to be talking a little, we're going to be looking at Sage Intacct. It is very, very popular. If you've never heard of Sage Intacct, it is a very popular ERP solution. I would say Sage Intacct's largest client base is a nonprofit. They have a nonprofit focus, which they call a quick start, a nonprofit quick start, that makes the implementation so much easier and so much faster. So I'm going to I'm going to bring up Sage Intacct here. And all right. So actually, since I'm already here, this is actually the bank reconciliation. So I wanted to just, we spoke a little bit about, the bank feed and all. So I wanted to just talk a little bit about the bank reconciliation process. So within, I'm just gonna create another screen here. One of the things that you can do with Sage in automating the bank process is that you can set up rules. So within Sage, and we're not doing training here, but I'm just going to mention that what you essentially can do is set up the rules to help automate the bank rec. And there's really 2 types of rules. There's the match and create. And essentially what it is that you set the rules up and you say, if the transactions coming in from my system has the amount and matches with what's coming in from the bank, or the document numbers are match up, the check number, the date match up, go ahead and clear that. So you're establishing the rules for clearing the items on your book that are coming in from the bank. So that's one piece of it. And then the other piece of it is the create rules. And what that is that as transactions are coming in from the bank, let's just say it's the bank fees, for example. And so when the transactions come in for the bank fee, it's going to have some description. And you set up the rules to say if it comes in and if it says bank, bank fees, go ahead and book this entry, right? So you're recording that entry, telling the system to go ahead and record that entry for you. And so if you set this thing, if you've set the rules, for both the match and the create right, meaning catch every scenarios, essentially you don't have to do anything on the bank, right? Because the system is gonna just do it for you. So I just wanted to mention this. Now, the other thing I want to talk about is on the dashboards. We spoke a little bit about the checklist, so I wanted to just bring up and just so you can see what that checklist looks like. So this is a checklist, and I wanted to step back and just mention a couple of things. This is a checklist. What that means is that you can use it for month-end checklist, for year-end checklist, for any checklist that you see is applicable. Meaning, I even have clients that use a checklist for uh, where they use it for managing their grants as well, for organizations that issue grants, that they're grantor. So it's just a tools, and I would look at it that way, right? And so if we look at an example of a checklist, right? So in the checklist, you can assign, you can set assignments, you can set, the begin and the end date, when tasks should be completed. You can track the task status. You can attach documents. So there's a lot of things that you can do to basically track the activities of your checklist. So I just wanted to show you that. And then the last thing I just wanted to comment is that as I wanted to just talk a little bit about dashboards and financials. So all of these modern systems are going to be able to handle your typical financial reports. And I think one of the things that really, something to think about is to get the system to help produce reports that are operational report, meaning that if and you don't, so for these operational reports, you don't want to be able to have to produce them outside of the system. So I wanted to give you an example of what that may look like, and this is actually a real case example. So I have a client that needed to produce a report similar to this. This is not your typical financial report. What this report is actually it's a budget report, and so this is to manage their grant. Your typical grant reporting may have revenue and your expense line items, and the overhead allocation and so forth. What this is that this is their grant budget. Okay, so these are basically their grant line items. So for grants, budget are different than your organizational budget. Grant budget tend to be a lot more granular. And so salary is not just salary, it's broken down by, different positions, right, within. And so what you want to be able to do is the system to be able to produce this kind of report, so that at the end of the month, you're not trying to figure out, okay, here's my grant spend. How are the costs spread across these items here? So I'm gonna shift over to here, and I'm just gonna bring up something. Let's see. I thought I already had it up. Looks like not. And I am going to launch this report. this report is the same exact report as this report. To think about this, this is a grant report. So you've got their budget code, meaning this is the grant budget code, right? And then again, this is, the type of the line items, the type of expenditure. Is it personnel related? Is it travel? Is it subaward? Is it consulting? Right? This is how this grant is set up. And you've got the description for that budget line item. And you can see all the notes, even the notes that are associated with that specific line item can be tracked in the system. And of course, you've got it's a 2-year budget. So you've got the budget here, you've got the actuals. This is inception to date. This is the balance, and then this is the percentage spent. So the original report also break it down by month. I didn't break it down by month, but just to show you that this is something to think about is when you're as you're preparing for your month end, is at the end of your close, you're producing financials. Just don't, I would say extend, leverage the system beyond just your typical, statement of activity by, programs or by department, but go all the way down to this level if needed, right? So I know we only have an hour to present this, so we could spend more time on this. So I'm gonna get us back to our PowerPoint.
Terrific.
All right. All right, so our polling question number 3 is, how effective are your financial reports in helping department leaders understand and manage their operation? So let's see what our audience say, how our audience responds to this question.
Yeah.
Very effective, somewhat effective, not very effective, not effective at all. Hopefully we're going to be at the top, meaning very effectively or somewhat effective, and when we talk about effective reporting, it's one thing to produce the report, but it is also how effective are you in communicating that report to to the management team as well. How are they understanding the numbers, and being able to understand sort of where you are and pivot. That's great. That's great. So I think majority, as we said, we were hoping to get, if very effective or somewhat effective. So I think so majority is in that in A or B. It's great to hear. All right, so we're close to the end. This is our take. I wanted to go and talk a little bit about takeaways. So, Paul, do you want to start?
So many takeaways. Yeah. I think the importance of documentation, even for something like a financial close checklist, and ensuring you're always getting continuous feedback, that's really important to me.
Great. Mike?
Good. And for me, I think is always looking for opportunities to improve the process. And improvement is not just the number of days, but also the quality of the process, the safety level. And I think what comes into that process, Berlin, that you were just finishing with, is, are the reports meaningful to people? And if they're not meaningful, they're not going to use them. And that leads us to what I think the close process is step 1 in a 2 or 3 step process. And steps 2 and 3 are using the current numbers to look ahead.
Yeah.
And then step 3 is, in that looking ahead, sharing that with governance, with constituents and staff, and collaborating on how numbers today will impact where we're going in the future. Limited resources, many ways to use them, have to be out there and smart about it.
So I think my perspective in terms of a takeaway, and I'm gonna come in from a technology lens here. I think that it's important to understand what your system can do for you. I think you should maximize as much as possible the tools that you have. Yeah, and if your tool's not able to help you automate, the month-end process, there's lots of solutions out there that can, and that's something that you might want to look into. The other thing I also wanted to mention is that and I think, Mike, you hit on this a bit, and that is the importance of, getting the information out and working with the leaderships there at the organizations to make sure that they know how the organization's doing. I think that the tools that and what I just showed you with the really nice dashboards and all, these systems have these dashboards, but I think that it's also important to understand, you know, uh, the folks that you are working with in terms of, what are they, how do they work, and and how should they receive this information. For example, dashboards are great, but there are organizations where the staff will never log into the dashboards. I mean, it is what it is. And if that's the case, dashboard isn't the tool for you if you're, if they're not willing to do that. And so I think you have to understand sort of, how best to work with the folks that you are supporting. And if it's not dashboard, maybe you could automate, sending the reports to them directly. That could be another option. The technology also does that. So I would really understand sort of what it is that help them to, look at the numbers and collaborate. So.
In Berlin, I think to help key on that word collaborate is I always like to stress to the finance departments that the month-end close isn't done when they issue the reports. It's done when they get feedback off of those reports. And by getting that feedback, one, it gets them out of the side of the finance department and communicating, collaborating with individuals. And that feedback will have, real impact. And sometimes it is just checking. There could be something there that's been miscategorized, as we'll see. Even a small organization that can have thousands of transactions, and such. But I think stressing to your finance people that the month-end close does not end when the reports go out the door. It's sort of the middle of the process.
And I also think that it's also important to establish a safe environment where the folks that you're working with, feel comfortable in terms of coming to, the CFO to ask questions, because not everyone have a finance background, right? And so it's important to establish that type of culture where people feel safe that they can go to the CFO or, director of finance, whoever that person may be, to ask questions. That's even if it's silly questions, they don't feel they don't feel uncomfortable, to ask those type of questions. I think that's also very, very important, because that's how you're going to get feedback, is if they understand the numbers that you produce.
Yeah, that comfort zone is not a small element of the system. Berlin, how much we rely on technology, but if people are stressed or uncomfortable, even feel, a little insecure in asking a question, because they just goes a long ways towards the system breaking down.
Correct. All right. So I think we are close to our presentation. We're not going to go through the last polling question here. Let me see. So just really a quick note. I mean, we do a lot of these types of presentation. We would love to get your feedback. If you have topics that you would like to send to us for future presentation, we would love to get your ideas. And this is an email address that you can send your ideas to. So we have a few upcoming events. We have a short presentation next month on One Big Beautiful Bill. It's only a 30-minute presentation, and it's not CP accredited. We also have a strategic evolution and financial sustainability, and that is actually a seminar. It's not a webinar, and it will be held in Atlanta, Georgia. So if you happen to be Atlanta, Georgia, and you're a nonprofit on that day, feel free to come by and stop by the Fox Theater. That's where we're having the seminar. And then the next one we have in November is an affordable alternative to QuickBooks. So we recognize a lot of nonprofits out there that might be on QuickBooks, but they have the complexity that QuickBook really can't resolve, especially when they have multi-entities and multi-currency. And so there is an option with Sage Intacct Essential. That's what we'll be talking about. And then lastly is the Sage Intacct R4 release and what's new. So Sage does 4 releases a year, and it is a technical presentation, and we go through sort of what are the new features of that release. So, and then we provided a link there to register for any of these sessions. So I believe that wraps up our presentation. So I wanted to thank Mike and Paul. Thank you so much for joining us in this presentation here, for your support. We really appreciate it. And I also wanted to thank everyone who's attending this presentation as well. Thank you so much for joining us. And yeah, I hope to see you soon in future events. Thanks, everyone.
Thank you.
All right, take care. Thank you.
Bye-bye.
Bye.